Hi everyone, welcome to yet another extremely interesting episode of the Fisdom Wealthpeek, wherein we try to demystify the hottest NFOs ongoing in the Indian mutual fund industry. And today with us, we are going to talk about an extremely mutual fund industry. It is Axis Value Fund, and with us we have an equally interesting guest, Mr. Raghav Iyengar, who is the Chief Business Officer of Axis Mutual Fund. Raghav, a very warm welcome and thank you for your time.
Thank you, Nirav. Thank you for having me on this.
So Raghav, without beating about the bush, okay, there is one important question that I need to ask at the very outset. ये value investing होता क्या है, right? So what is value investing all about? Just help us understand it better.
Value investing is a very, very interesting concept. In fact, it is something that we are all used to on a day-to-day basis, more than us, possibly our family members. It is trying to buy stocks at a lower price compared to their peers or to the industry. That's the traditional methodology of value. Most of the value investors use price metrics like price to book, price to earnings to try and figure out whether the stock is cheap relatively to its peers. But I think that ignores one interesting point, Neil. That is the problem is that they ignore fundamentals in that whole argument. And ultimately, a stock is bought because of its fundamentals, not only because of the price. So yeah, that's the traditional definition is based on price.
Right. So that's the traditional definition. But how does Axis Value Fund differentiate? There are so many value funds out there in the industry, and I'm sure you would have a very distinct framework that will help you stand out versus the others. So if you could throw some light on the framework processes and just generally what helps Axis Value Fund stand out.
Yeah, it's a lovely question because Axis, as you know, has always stood for growth and quality. I think, and those our funds are largely built on those two premises. And when we looked at the value investing universe, we found that the traditional barometer for checking value is largely price. So what we are going to do in this fund is attempt to try and put together a framework which will marry fundamentals with reasonable valuation. And obviously, so we will have a set of filters before we get into the price of the stock. Normally, it's the other way around. People look at the price first, then the stock gets selected, and then people look at it. I think in that process, they tend to miss out on the core issues of fundamental viability of a particular stock or an industry. So I think in our case, we're just flipping that process a little bit. If we are going to attempt to do this process, we are always looking for ways in which we can enhance our investor experience. We just did the quant fund, if you remember, about 3 months back, which was based on a set of factor-based investing that's done really well for our investors and our partners. This is the second attempt to try and do something which is complementary to our existing fund management skills.
Right. Understood. Quite interesting, perspective to manage a value fund. But as long as we're talking about value investing, there is also widely conceived notion that value and growth are two styles that perform during cycles, and it is best if an investor tries to manage its exposure to value-based investing and growth-based investing across cycles. But here's the catch: no one really knows which cycle is what, right? So what are your thoughts on whether value funds can continue to remain in the core allocation of portfolios? Is it something that can continue to be an evergreen component of an investor's portfolio, or does it need to be churned across time periods?
See, in the Indian context, if you see, value has not done too well. That's basically because the Indian stock market is full of winners and extreme losers. So you have value has performed in extreme short periods of time, but if you take a longer term approach, you will find that value is actually underperformed growth and quality. That's largely because, as I said, there are many companies are having lower prices because their fundamentals are weak. And unfortunately, investors tend to buy them because of their low price, or that's what attracts them. And these are called value traps. And unfortunately, as the name suggests, it's just a trap. Unfortunately, you get stuck in a low PE stock, for example, and it's got a low PE largely, because it deserves to be low PE because its fundamentals are not good, or it's in an industry which is decaying, or it has all the other factors which normally constitute a low growth stock. So in the Indian context, yes, I think growth and quality have done really well. I think the approach that we are attempting to take, which is marry both these approaches, have a bit look at stocks with reasonable valuation, but of course before that overlay the growth and quality filter. I think that is a good place for you to stay invested for a long period of time. But if you ask me, traditional value uh, of stocks, I think one needs to be careful and one needs to have a bit of a more core and sector approach on that. So if maybe when value themes play out, like what has happened, for example, in the last maybe 1 year, maybe it might be time to exit it. In our case, I think we are hoping that investors take a much longer time frame and at least hold for a minimum of 3 to 5 years before making any decisions to exit out of the.
Absolutely. So, my takeaway here is value investing is very different from bottom fishing. Just because something is available for cheaper than it was does not mean it's a value bet, right?
Absolutely.
It could be a value trap. And the only thing distinguishing a value trap from a value bet is the context that fundamentals lend to it. And
Absolutely.
at Access Value Fund, you're trying to marry the concepts of pricing with the concept of fundamentals and try to create a holistic proposition in terms of a value oriented portfolio, right?
Absolutely.
So,
Absolutely.
so very, very interesting things happening around this fund. And, towards the end of this conversation, I have one very critical question. Whom is it suitable for? What kind of an investor should look to invest into it?
So a first-time investor can avoid this fund. If someone's coming into as a first-time equity investor, I think a large cap fund is a safe place to enter. But someone who's an evolved investor who understands a little bit of a difference between growth and value, understands the difference between, let's say, a value trap and a fundamentally great company, and obviously someone who has an investment horizon of 3 years plus at least in today's invest. These are the guys, in my opinion, who should think of investing in this fund.
So, Raghav, I absolutely love the way you made it very clear. I feel it is reflective of the ethos at Access Mutual Fund to
Thank
remain transparent and clear in everything that you take up. And you made it very clear whom is it suitable for and whom not. It's not
Thank
quite often that someone goes ahead and talks about who is it not suitable for.
Yeah,
So,
yeah.
thanks a lot for
Thank you,
that,
Nirav.
Raghav. So,
Thank you.
so yeah, so I think this is going to be an exciting proposition. I am sure investors are going to be quite interested in this fund, and I wish you great luck for the NFO. And I'm sure this fund is going to do a fantastic job even beyond the NFO period. We are in for the longer haul, and I'm sure that the investors getting on board understand this, and they are going to sign up for the great journey that they can have with this fund.
Thank you, Nirav. Thanks. That's really great coming from you. And yes, thank you very much for your wishes.
Thanks a lot, Raghav. So, guys, this was the Fisdom Wealthpeek dedicated to Access Value Fund. Please understand that a value fund is something entirely different from just scoring for cheap bets. It is more about like they are going to do at Access. It's about marrying the fundamentals along with the pricing situation at stocks, and the objective is to deliver great value opportunities to you through the Access Value Fund. So please do take a look at it as soon as it is launched. I'm sure you're going to find it extremely interesting. Reach out to us at research@fisdom.com for any further information, and we will be more than glad to help you. So thank you, Raghav. This has been a great conversation.
Thank you, Nirav. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.